Hi there traders, this is Chris from Elite Currency. Last video of August before we take a look at the new monthly candles, of course, over the weekend. Now though, the video on euro dollar and pound dollar for Thursday and Friday. Okay, before we actually dive into those pairs, I wanted to let you know that we have a free guide, a reference guide with really very elaborate Elliott wave patterns and Fibonacci relationships. Take a look. There's really a lot of things going on here, and everything is explained from A to Z. It's really comprehensive. It's very well built and very well developed. It explains all the waves and fib relationships there. So it's for free. It's on our website. Check out this link. I'll have the link down below in the description so you can easily click on it and find out more. All right, let's take a look now at this euro dollar. So price bounced at the 21 EMA zone right here. We were looking at the continuation of the uptrend that we were seeing now already for a few days. On the 28th of August, 2 days ago, price was around here and it made one more higher high as expected, then made a stronger pullback. So there could be a potential head and shoulders pattern playing out right now. On the 4-hour chart, you don't see it too much, but on the hourly chart, you can see a left shoulder here, right shoulder here, a bit higher, but ultimately it could be going into kind of a bigger retracement. We also spoke about the fact that price was running into a big resistance zone on Tuesday, which was 117.50 and 117.75. Now price didn't quite get there. It went, to be precise, up to 117.33. All right, so if it does push above this resistance trend line, and if it breaks above the 21 EMA again, then yes, that target zone is still open, and there could still be a 50 to 70 pip move to the upside, and there could be a bullish break above this resistance trend line. Also, if it breaks above the 21 EMA for the second time, those breakouts typically work better, especially if price has already broken below the 21 EMA for quite a while. All right, here you can see the difference. Price just tested it for a couple of candles, then broke above it. Those are swift, fast kind of retests of those 21 EMAs, and especially if price moved away from it so much, then it typically acts as a bouncing spot. This is all what we explain in the SWOT course, by the way. Here too, swift move into it and bounce, right? So those are different situations. Here price broke substantially below the 21 EMA, so the first break above it is riskier, and you can see that it didn't go all too far and now is heading back down again. So if it uses 21 EMA again and breaks above it, that would look good for a bullish breakout towards that target zone of 117.50, 117.75. That said, if it breaks below this support trend line, of course there could be that bigger bearish correction that I indicated, because what we were looking on Tuesday was the fact that this is probably wave A, wave 1, 2, 3, 4, 5 for those that like wave patterns. But if you don't like wave patterns, it doesn't really matter. It looks like if price breaks through the support trend line and through the 21 EMA, that there could be a bigger bearish breakout and a bigger bearish move to retest and retrace part of this bullish swing. And there could be, a downside towards the fibs of wave B. Let's put a fib from the very bottom to the very top, and you can see that price could break down to the 23, then later on to the 38 or 50, for instance. Make a bounce and then maybe move again down, hit the golden ratio, the 61.8 fib, and make a bigger bullish bounce there, because that's when I would expect price to start the wave C. All right, so that's what I'm expecting at the moment, ABC. But if you're a more technical trader, there is a potential reversal chart pattern, and a break here I think would confirm the breakout and the potential downside for the euro dollar. Let's get rid of this fib. Let's take a look at the daily chart. All right, and you can see that this was a very strong move up, big momentum to the upside, but those don't last necessarily forever, right? There could be a correction here to the downside. Ultimately, though, as I already indicated last time too, is that I expect price to bounce roughly at 115. Let's put back that fib. I think the 61.8 fib is, no, the 50 fib is 115. All right, so that's where I expect the bullish bounce to occur, because I think this is strong momentum, and I expect price to continue like a zigzag like this to the upside. All right, now of course we are close to the end of the August candle, but we still need a few days today and tomorrow, because otherwise this candle is still open. We'll be reviewing this candle on the weekend. But if it does close anything like this, of course, there is a strong wick at the bottom that could indicate a bigger bullish bounce for the next month or two as well. Otherwise, I have nothing to add on the euro dollar. I think at this moment we're seeing a bigger move to the downside. Let's see how price responds to this support trend line like this. Right, that could still be a bouncing spot, and just because it breaks below 21 EMA could indicate a downside, but in this case there's that trend line still to be careful of. So I would say up to 116.75 probably. Let me check. Down to 116.75, still a key zone for a potential bounce to the upside. But if it breaks below that, then we might be seeing that bigger breakout. In that case, I would look for a break flag on the lower time frame and continue like this. If it does bounce here or a bit lower, and then retest this resistance, wait for the break above the R1, and there could be that bigger breakout to the upside. Now with regard to the pound dollar, very big push up, in fact. Look at that. Big momentum, and it did break this ascending wedge chart pattern to the upside. It had or a triangle, depends how you look at it. If it's a flat top, it would be a ascending wedge. We had higher lows like this, and eventually price bouncing again at the 21 EMA. I think we mentioned that on Tuesday, that the 21 EMA is important. If it breaks below it, there could be a bigger breakout to the 61.8 fib, but if it bounces, there could be a continuation. That's what happened. Bounce, and the strong continuation, in fact, looks more like a wave 3, and it broke above the 50 fib. And in fact, it is starting to look, pretty impulsive. Let's use a different template here, clean it up a bit. There we go. And you can see that price is breaking above the 21 EMA. So I do think that it is likely that the patterns have changed. This could be the end of a wave 5. This could be the first start of a bullish leg. Maybe over wave A, down it goes for B, and up it goes for C. That is very possible, I think. And it could be that this is a wave 1, 2, 3, 4, 5. Now, within wave 5, I think we're looking at a wave 3 at this moment. Whether you like waves or not, forget that for the moment. It's just that currently there's a big momentum to the upside. And if we get a flag pattern like this, a chart pattern, a triangle that stays above the 50 fib in the R1, typically would bounce at the 23.6 or the 38.2 fib. And if it makes a flag like that, bounces off the fib, breaks the flag, I think it's looking good for a continuation. It already hit the R2, but it can then go to the minus 272 target at 131, maybe even extend further to these fib targets as well, and ultimately maybe even the R3, although I don't think that will necessarily happen this week. That's quite far from here, but you never know. For me, this or this target seems a little bit more likely. All right, and that could happen next week too, I think, depending on how long and how deep and how far this correction will probably last. Am I sure this will be a correction? Not yet, but it does look likely. Price made a high here and is moving lower now, and I think there's a good chance it will hit the 21 EMA. If it does break below the 50 fib, specifically if it breaks below this top 2, then of course something else might be going on. I would not expect price to break below these levels, because now that they are broken resistant, they become potential support. So if price breaks below it, then something else might be going on, and this might not be the wave 3-4 that I expect. All right, so that's what I am looking for a continuation. For one more push higher, this would be wave 1, 2, 3, 4, and I'm expecting basically price to make a wave 1, 2, 3, 4, 5 within that bigger wave 5 like this. That could complete wave A, 3 waves down for B, and up we go for a C. That seems the most likely at this moment. Technically, it hasn't invalidated the wave 4 scenario yet either, which is right here. This is the bottom of wave 1. All right, but when you consider this bullish candle, which is very strong, I think that momentum will break through the resistance and will push through that point and make one more higher high. Based on this candle, because it's big volatility candle, it engulfs the previous candle, and there's a candle close near the high. So I do think that is likely that we'll see a pullback and continue. Okay, that's about it for now. Don't forget the guide, very interesting, lots of good tips and all the information on one spot. And of course, it's for free as well. Wish you all good trading and find more analysis at our website, and talk to you soon. Cheers.